Neo Technologies, Mr. Akhil Pillai, to introduce the speaker and to moderate the session for today. Over to you, Mr. Akhil.
Thank you, Jose. Welcome to another edition of TiE cryptocurrency session. My name is Akhil. I welcome you all attendees. So, before starting, I'll give you a small introduction about Mr. Deepak. So, Deepak Korah George is currently a partner of Korah & Korah CAs, a firm based out of Cochin, and is looking after both indirect taxation and startup compliances. He completed his schooling from the Choice School, Tripunithura, and went out to pursue his BCom honors at St. Xavier's College, Calcutta. Subsequently, he joined a articleship with PKF Sridhar and Santanam LLP, Chennai, where he gained expertise in taxation and internal audits. Post-qualifying his CA final in 2019, he took up the role of manager taxation at Korah & Korah CAs. Deepak developed a flair for public speaking during his college days, and it took us to his advantage when he got the opportunity to present papers at 5 national and 1 international conference for CA students. Post-qualification, he was invited to present technical topics at various Rotary Club meetings and have also contributed articles on GST and startup taxation. He also has a YouTube channel called Connecting Minds, which is used to explain tax and financial concepts in the most lucid manner through short videos. So this is Deepak for you. Deepak, up to you.
Thanks, Akhil, for that lovely introduction. Hi, everyone. Good evening. I hope all of you are doing great this evening. I can see the attendee list slowly increasing, so we'll keep check of the time and start off the session. So right away, let me share my screen. Right. So as we saw on the poster, the topic for the evening is Crypto for Beginners, and it was titled Crypto for Beginners, Earn and Invest. But before we look into earn and invest, we have to understand what exactly crypto is. What is the tech behind crypto? Then only can we sort of move into earn and invest. So, in fact, today morning, my wife had asked me, okay, now that you have prepared the slides and you're going to take a session for TiE, would you think it's the right time to invest? Well, I did not reply to her. I was in a hurry to leave to another place. So hopefully she's attending the session and hopefully she'll get the answer without me having to answer to her question. So I'm sure, like her, most of you are here to understand as to what exactly cryptocurrency means and whether investing in cryptocurrency is a viable option or not. I'm sure you would have heard about the term crypto. The word itself sounds very futuristic. Whenever you open Google or you go to Amazon and you search for any product, or you see IPL in between, a lot of ads come. All are based for, they are either advertising that you invest in crypto and you earn so much, they're advertising their own exchanges. So every day, at some point of your time, you would have heard or felt or come across what crypto means. So therefore, my intention through this session is to make you understand, like I said in the beginning, what exactly is cryptocurrency and whether investment into cryptocurrency is a viable alternative or not, a viable option. So let's quickly dive into the different topics that I'll be discussing over the course of the next 1.5 hours. So here we have the index or the content that I'll be discussing. I'm sure all of us have an objective in life, right? So similarly, we attend every session with an objective. And therefore, after the session, you should be in a position to take away these topics and understand in a manner that, you thoroughly understand what cryptocurrency is and whether it's the right time, the right call for you to invest in these currencies or not. So first we'll discuss the what and the why, basically the history and the background. Once we discuss the what and the why, we will discuss how also, that is, how does cryptocurrency work? Cryptocurrency is basically a collection of various currencies operating through something called as a blockchain. All these we will discuss over the course of the next 1.5 hours. But my intention is to explain to you what, why, and how. After that, we will discuss the various types of cryptocurrencies and how to invest in them. Because you need to also understand how to start off investing, even if it is rupees 10 into cryptocurrency. After that, we will look into the much debated item, and that is the legality of cryptocurrencies in India. The golden question as to whether cryptocurrencies are legal in India or not. And after that, we will look into the tax aspects of cryptocurrencies. Well, you would have heard from somewhere that there's a doubt whether still cryptocurrencies are legal in India or not. But the fact is that tax has already been imposed on such cryptocurrencies. So we'll discuss what are the various aspects of taxation. And finally, if time permits, we can also discuss about the future of cryptocurrencies in India. And in between all this, you can post your questions on the chat box, or I can take it up after the session. But the fact is that I have to do everything in the next 1.5 hours. So we'll start off. The first question is, before what is why? If you understand why, you'll understand what is cryptocurrency. Why cryptocurrency came into the picture, why it broke into the scene suddenly. Well, to understand that, you need to understand the evolution of money, right? The story of money. So I have the first picture here, and that talks about the barter system. All of us would have heard about the system way back when we were in school. Then in the barter system, if a cotton shirt is to be exchanged with a sack of rice, then one commodity is exchanged with another commodity. Let's say you have a retailer selling a particular piece of clothing, a particular piece of clothing to the farmer, and the farmer is selling his grain of rice. So what he does is that he is exchanging one item for another, and that is the barter system. But what happens if the farmer does not want that piece of shirt or that piece of clothing? He already has a shirt. He wants to give up his sack of rice, but he does not want what the retailer is trying to sell. So because of this limitation, I would say the double coincidence of wants, as it is called, they look for some commodity which had a value of exchange. If I don't want a particular product, why should I buy it and sell my stuff? The barter system fell, and up came the time of precious metals and gold. Now, gold or golden, I would say, the metal gold has a value. Even today, you can see it up and down. It is an increasing trend as we speak. So what is happening is, once you have gold, then it represents the value of exchange. So the farmer says that, okay, I don't want a shirt. Instead, you give me gold, I'll give you a sack of rice. So what happened was, people used to give gold and then buy the product from the other person. So this led to a person having so much of gold that he couldn't carry it around. He couldn't transport. Of course, security issues kicked in. And therefore, with all this, the market or the system wherein gold was used as a barter fell. So they needed something which is more portable, easy to transport, and more secure, because you can't carry gold and it's subject to a lot of security. And therefore, the need for printed currency came into picture. So what happened was printed currency came and it was equated to the value of gold. In other words, printed currency pegged to the value of gold. And this was used for a particular item. In fact, when I'm giving gold to you, the other person is giving me printed currency, and I can use that printed currency for my other transactions. So initially we started with two products, then we ended one product, then we ended both the products, and now it was between currency and gold. That is, you keep my gold, you give me your currency or your printed currency, and I will use it for my future transaction. Gold-backed currency. This was the rudimentary form. This was the start of the banking system and the centralized system and all that, because that's how gold deposits today work. Now, what happened was, after some time, the World War, of course, yes, it happened. Okay, there was a need for countries to raise a lot of money, a lot of printed currency. And therefore, they said that the gold reserves are depleting, and therefore, you need a lot of printed currency in circulation. So they met in the US and they decided that all currencies of various countries would be pegged to the US dollar. And US dollar would be ultimately pegged to the value of gold. And that is why even today, US dollar is dominant. It is called the gold standard. And it is used as a benchmark for many other currencies as well. But as time went, there was a monopoly of US dollar. Many countries felt that they needed their own currency and they started printing their own currency. And they finally ended up exchanging paper currencies with each other, as you can see as the fourth diagram, the fourth picture. A common question that all of us have is, why don't we keep on printing money? Well, we can't do that. India cannot keep on printing rupee notes, because we have to keep in mind the economics, the supply demand. Because if you keep on printing money, obviously the prices of goods will increase, inflation will soar, and that will be disastrous for a nation. So there's a limit to which we can print currency. And of course, all this was controlled by a central agency, a central bank. Because of the limitation with exchange of printed currency, there came another form of currency. And this is how cryptocurrency broke into the picture, came into the picture. So cryptocurrency, in other words, the most common being cryptocurrency being Bitcoin, came into the picture to take care of the limitations of the previous system, which is still in place, exchange of printed currency. What were the limitations? One, you had a central organization controlling the supply of money. There was always a risk of inflation, right, because of some ineffective policies made by the central organization. Poor decisions could lead to inefficient systems, and you've heard of many bank frauds and banks collapsing and all that in India. Security and threats, yes. Banks, their security systems being hacked, and therefore a lot of money dwindling. And whenever you want to pay money abroad, there's always a tension, there's always time being consumed in this entire process, even now. So to take care of these 4-5 limitations, cryptocurrency came into picture. And therefore, the first and the most popular cryptocurrency till date emerged into the scene, and that is Bitcoin. So having understood why, right, why this thing has come into picture, we need to now take care of the what. What is cryptocurrency? In other terms, I'll take Bitcoin to represent cryptocurrency because it is the first one. So what exactly is Bitcoin? Bitcoin is a type of cryptocurrency. We'll look at other types of cryptocurrencies as well, but the most famous one and the most valuable one, even as I speak right now, is Bitcoin. an advanced futuristic digital currency. Nowadays, it is being used more than a digital currency as a digital asset. People want to hold it because it is very expensive to sort of trade on it. In fact, there was a white paper that was brought out on Bitcoin by a person called Satoshi Nakamoto. The fact still remains, there was actually a Netflix documentary on that particular person. And the documentary is all about different episodes wherein they are searching for that particular person. His identity till now is not being found. Yes, his name is out, but we don't know whether it's a he or a she or a group of person or a company or whatever. But the white paper, he gave a full, 3-4 pages of document wherein it is mentioned what is Bitcoin, why it is brought to the picture, what are the technologies supporting it, and a lot of other things which form the base of cryptocurrency evolution. So he can be indirectly called the father of cryptocurrency in one way, although we don't know who exactly he is. So in his paper, it was mentioned that cryptocurrency is a peer-to-peer electronic cash system. And I'm reading it out of the slide. A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. So his concept here was that there's no need of a financial institution. From peer-to-peer, P2P, individual to individual, you transact easily, allow online payments, receipts, etc. through Bitcoin, through cryptocurrency, and there's no one monitoring you. So the obvious question in your heads would be, is there a monitoring mechanism? Isn't that dangerous? Well, no. And because he's explaining the technology supporting this transactions of Bitcoin's purchase, sale, and all that, which we'll discuss later, it can be well understood from his paper that his intention is one, that he wants to make it decentralized, which means there's no central institution. And number one, he wants to make it safe, secure, fast. So that was why he brought in Bitcoin. That is the meaning of Bitcoin, which is an advanced futuristic digital currency. It works just like it works on internet. I mean, internet, all of us are now aware that you can create and make videos. Gone are those days where you need to find a producer, a sound engineer, and then make a video and then post it and produce it, all that. No. I and you, we can go to any particular live streaming platform and record a video and post it. Of course, that will be controlled by a company, but we are free to do it. There's no one monitoring this per se. So this is something like the internet. But his intention was that this should be validated or this should be monitored through a ledger called blockchain. We will learn what blockchain is because that's the underlying, that's the main aspect in this session that we have to understand, blockchain. It is highly secured. It is basically an online data storage system which is highly secured. It is fast. As of now, it is stated that cryptocurrency, as I said, is the next form of currency. And after cryptocurrency and Bitcoin, there came another set of coins, basically to take care of the limitations of Bitcoin, which again will come through. We will discuss that. So like I said, Bitcoin is something which is nowadays being used as a digital asset, something like gold, because gold has a value. And many countries still haven't started using, except for countries like Salvador and all that. They have not started using cryptocurrency as a legal tender, as a currency. And India will never use that also. But it is something like gold, which means a commodity which has value, which has exchange value, but it takes care of the limitations of gold. Why? Because it is virtual. It fulfills the limitations of transportation, security, and it is virtual, but equal value of gold. Now, this particular graph, I found it when I was browsing through a particular website, and they showed the 10-year compounded annual growth rate, otherwise known as CAGR of Bitcoin, which means in the last 10 years, Bitcoin has been growing at a rate of 200% year on year, year on year, year on year. So an investment in 2010, this is as per 2020 data, an investment in 2010, if you say put 10,000 rupees, you can imagine year on year, year on year, year on year, 200% will reach where in terms of crores in 2020. So this is a graph which shows you because of the buzz created, because of the hype created as to what this thing is and what all it is capable of doing, it went up to 200%. So it's very important that we gain a first mover advantage. That's one of the takeaways of this session, that all of you should understand before you actually find out whether you should invest or not. Understand what Bitcoin is and gain the first mover advantage by investing. I leave it to you whether to invest or not, because no one is an expert at predicting things. Later, we will see what is the value of Bitcoin now. In fact, the value of all the cryptocurrencies has come down drastically. So we'll see how much of Bitcoin today, as of 15th August, yesterday was valued, and how the other currencies are pegged to it are also valued. So having discussed the why and the what, we need to now try and understand as to how it works. Because believe me, that many of us stop at this particular slide and we just quit learning about crypto, because we just can't digest the fact that it, there's so much of technical stuff involved in this to learn how cryptocurrencies are exchanged, received and paid and all that through two types of technologies which will come. But the disclaimer here is that learning the tech involved is not necessary for investing. If you want to invest today, you can download an app called Volt. You can download an app called CoinSwitch. You can download an app called WazirX. And from step 1 to step 8, it will show you how you should buy and sell crypto. I mean, it's very simple. You should not know, there's no need for you to know the tech involved, because that's the back-end stuff. But in my opinion, knowing how beautiful it is, this tech is scripted, and how it is following everything in place, only then will you appreciate the fact why people are talking about Bitcoin. Not about the high value or low value it carries. It's about the underlying technology that's involved. So two types of technology we will discuss here, and that is blockchain and cryptocurrency. So I'll just stop sharing here, and then I'll go back to my whiteboard, which I have, to explain to you how this is working. Right. I hope you can see my screen here. It's the whiteboard, and I did something here. I want to, it's quite complex, the system, but I'll try to make it as easy as possible, what I want this to basically, right? And then we will try and understand what is different from the current system, what is happening now in the crypto world. So here you can see there are 5 people, each holding rupee 1 lakh. All are having their rupee 1 lakh in their own bank, which is guided by a banking network, and that is guided by a central bank. If person number 2 wants to transfer 50K to person number 3, he can do that from his bank. So in his account statement or in that bank ledger, it will be minus 50K, and in the person 3's, in the third person's bank statement or ledger, it will be plus 50K. That's how it works, right? Currently. So these ledgers are what? It is maintained with the banks, right? You have a passbook, which ultimately you have to go to the bank and get updated. So the main ledger is held with the bank, and the bank has ledgers of all the 5 people. You may not have the ledger of the third person to whom you're transferring, right? But the bank has. So it's controlled by a central agency. That's how the current system is, and that's how we're all accustomed to. Well, here we need to understand there are two technologies involved, two types of technologies involved. One is, of course, blockchain technology, and one is cryptography technology. That's why it's called cryptocurrency. Crypto means that something which is encrypted, right? The term actually evolves from the study, from the word called cryptography. It means encrypting some data. So to put the long story short, cryptocurrency, or bitcoins for that matter, is supported by two types of technology. One is blockchain, one is cryptography. Because of cryptography, it is secure. It is encrypted. Because of blockchain, it is fast. So it is secure, transparent, and fast. And that is why people are in awe about the technology and about what this particular word called cryptocurrency has to offer. So I took you through the existing system, and now I'll take you through the blockchain technology. So what happens in the crypto world is that all this happens online. So when one person has to send 50,000 rupees, a data is being generated. That data is put into a particular block. I'll tell you who puts it and all that, but it is put into a particular block. And then one more data is generated, it is put into block 2. And when in block 2 it is put, there is something called as a hash number. That is what you see here. Okay, that is what you see here. There's something called as a, let me see if I can highlight. Yes, this is the hash. Yeah, this is the hash number. So hash number is a unique, like a fingerprint, right? Unique ID. It is created for each block. When the third data is generated, it is put into block number 3. And mind you, the link, it will definitely be linked to the second block. So for the third block, you have one more hash being created, that is 5678. But it is linked to the previous block. So one data in block 1, a corresponding data which goes to block 2. So it is linked. Of course, when you make a payment, there'll be two sides of it, right? There'll be a party receiving and there'll be a party getting it. I mean, paying it. So block 2 will have a unique code or a hash. Block 3, when the third data is generated, it will have a hash, and that will be linked to block 2. And when block 4 is being, when the fourth data is being generated, it will be put into block 4, and there'll be a particular hash. The beauty about cryptocurrency tech or blockchain tech is that all these are linked. Which means if I cut, let's say I'm cutting something here, if suppose there's someone doing something here, then all the previous blocks will get tampered. It's like a audit trail. You know, we call audit trail is a very famous term in our field. If you tamper with one data, then it tampers the other blocks as well. So since it is linked, right? Since there is one hash and there's one hash below it which belongs to the previous block, you cannot really hack it. It is secure, transparent, and you really cannot play with it. So there's so many blocks, and you know, it so happens that in one block there could be multiple transactions happen. So this is I mean, it's quite difficult to actually explain in terms of a diagram as to what exactly happens in the virtual world, but this is how it is, you know. And unlike the current system, everything is linked from start to finish. So a person sitting somewhere in the north, if he has to transact with a person sitting in the south, it is linked through blockchain, and it goes through different blocks. It may belong, the data of the blocks may belong to different people. So since everything is linked like a spider web, if you tamper one particular string, the entire thing will get jerked. And then the users of that block, right? Because when a person is making a particular payment, he has the ledger of that block. This block is nothing but a ledger. He has a record of that. So if you're tampering at the first position, he will get a notification there's something wrong. This is the tech This is the first tech that is involved with cryptocurrency, and it is in this ledger that blockchain travels. The data of data of Bitcoin travels. The second tech that we come across is, like I told you, cryptography. Cryptography makes the transactions extremely secure, right? In this particular diagram, coming back to that example of 5 people, everyone has a ledger. Unlike the earlier one, the centralized organization or the bank had a ledger, but in this case, all of them have a particular ledger. What is the ledger? Blockchain. So if one person has to transfer 50,000 to another person, he will enter his wallet on a particular cryptocurrency exchange, and then he will transact in Bitcoins equivalent to 50,000 rupees, whatever he wants to transfer. So because he has a public distributed ledger, this ledger that each of them have, he will have a record of what the other person gets also. Right? So the first difference is that there's no central organization. Number two, you have your own record, which means your own ledger. That means the ledger is called a public distributed ledger, not a centralized ledger. So like I said, if a person has to go and transfer 50K, he will do it in Bitcoins by entering into a particular cryptocurrency exchange. And he will transact. The moment he puts a sale order, Bitcoins will travel through the blockchain. It will enter into the blockchain environment, and it will be put there as a pending transaction, because blockchain tech also involves someone called as a cryptocurrency miner, a person to check if the transaction between the second person and the third person is, or the second person and the fourth person is correct or not. So we'll enter the wallet, he will transact in Bitcoins, it will enter the blockchain, it will remain there until the miner. That's why you would have heard about cryptocurrency mining and all that. These are people who have to submit the proof of work online. That means they volunteer to decrypt the data. Like I told you, cryptography tech is used to transact Bitcoin, right? Only the second person and the fourth person knows what he or she is selling and buying. The bank does not know. Person 1 or person 3 or person 5 does not know. Cryptography serves that purpose. It makes it extremely secure, and data miners or cryptocurrency miners have the facilities to decrypt this data, verify it, validate it, and finally pass it along the blockchain or add it to the blockchain, which is the ledger. So once it is in the ledger, they'll add it to one blockchain. Then after 10 minutes, they will mine, they will encrypt the data, put it into another blockchain, which will be linked through a hash. Again, after 10 minutes, they will mine, they will decrypt it, put it into the third blockchain, which will be mined, which will be linked to the second blockchain, and so on. Therefore, it becomes a part of a public distributed ledger. Why is it transparent? Because the person 2 and the person 4 knows each other's transaction, which is only between P2P, which is peer-to-peer. It's encrypted data, and only they will understand as to what they are transacting. So it's extremely, there's no third party involved. It's extremely transparent in this case. So the job of validating a particular cryptocurrency Bitcoin transaction and posting it onto the ledger is the job of a miner. That's why you would have heard about cryptocurrency miners buying heavy machinery in terms of high processors, computers, and placing it on racks. And they would need 20, 30 processors and computers to mine one transaction. And why are they doing this? They're not doing this out of community service. They are doing this because they'll get almost 6 Bitcoins if they decrypt it, which means it's not very easy to do it. It will be in a mathematical coded language. They'll have to decrypt it like a puzzle. And once they decrypt it, it means the transaction is approved, and that particular miner will post it on the blockchain. ledger. The person who decrypts it and approves it, he will get a gift in terms of 6 Bitcoins from the Bitcoin reserve. In fact, they say that up to 2041, it was also mentioned in the white paper, that up to 2041, the world has, Bitcoin reserves up to 2041, 21 million or so. And after that, all the reserves will get over. So it's a short-term thing, but you have time, 2041. And right now they're getting 6 Bitcoins for every decryption. Maybe after 10 years, it will be reduced to 3 Bitcoins because more and more Bitcoins are being generated from the reserve. So here you have, of course, the second person, the fourth person exchanging a cryptocurrency exchange, entering into their wallet, sending Bitcoins. That Bitcoin is being decrypted by the miner, posted on the blockchain technology, and that's how it becomes a part of a public distributed ledger. So once a transaction is approved, both person 2 and person 4 will be able to see it in his exchange, in his wallet. No other person, not even the miner, will be able to find out. So the obvious question you'll ask is the person decrypting? No. When he is decrypting, he will not know whether it's person 2 or person 3's transaction. No, he will not understand because he is given a particular code. His job is only to solve the code, approve it, and his job is to put it on a blockchain ledger. He does not know whose is it. So it's extremely transparent. That's why I'm repeating the word transparency here. That only it's a peer-to-peer, complete peer-to-peer transaction that's happening here. So this entire process done by the miner is called a proof of work, and that's a terminology that nowadays is being used in the cryptocurrency world. So it's impossible to hack, tamper, play with the cryptocurrency network because you have two great tech involved. One is cryptography, which encrypts the data, and one is blockchain, which distributes or stores the data in the form of a public distributed ledger. So we'll come back to the slides because my white screen recording is done. Right, I hope you can see the slides. So we were talking about how does it work? We covered why, what, how. Next, we will see the types. All of us are human beings, so we are experts in finding out the limitations with everything given in life. So Bitcoin, the type of cryptocurrency, had a lot of limitations. It took around 10 minutes. It's fast, but it's not super fast. Something that takes 10 minutes for the entire thing to work. Right? Google Pay is much faster. Yes, it's faster, but it's only within India. Bitcoin transactions with the person sitting in Salvador, with the person sitting in India, you can do it. So they wanted something faster. They wanted instantaneous, within seconds. They wanted a type of cryptocurrency which will help this cover this limitation. The fees involved was also quite high. Like the exchanges started charging for their wallet, for their login IDs and all that to come into the exchange and start using the wallet and transact. Mining became an issue because I was telling you that they'll have to buy a lot of computers, so a lot of heat generation, a lot of electricity costs, which went against the objective of climate change and all that. And moreover, they had only one purpose, that is currency, exchange, as a digital currency. But they wanted something different, some alternate coins which will not only act as currency, but also will help them to buy land, will help them to meet someone else, will help them to, give it to a particular shop and buy products and goods. And therefore, because of these limitations, the transaction time, the fees, and mining, most importantly, and something which is beyond the scope of just being a currency, they introduced many other coins. So alternate coins or altcoins came into picture with a better scope, a more larger scope. And they were quite unique rather than just dealing with digital currency. There are plenty of coins and tokens that we'll talk about, but that we can talk about, but because of the paucity of time, we will restrict our discussion with just 4 types. The first type is currency. All of us know Bitcoin is now that Bitcoin is the currency. And you've understood why, what, and how. Dogecoin came into the picture and later became famous because of that famous tweet from Elon Musk. These are volatile currencies, which means one day it will be 50 lakhs, another day it will be 19 lakhs. As I speak, the value of Bitcoin, which was initially, I think, last year it was around 45, 50 lakhs. Now it is 19 lakhs. You can understand the volatility involved. The second type is stable coins. These are backed by reserves of some kind of commodity, cash, less volatile. You have Tether or USDT as it's famously called, because it is pegged to a US dollar. So if the US dollar goes up or down, this will go up or down. So it's a stable coin because a US dollar will not fluctuate that much every day. And then you have something called as the packed gold, which is a currency that is pegged to gold. Utility-based tokens. Well, the famous one that is ETH or Ethereum. Why is it called utility tokens? Because they themselves have a blockchain. WazirX is a very famous cryptocurrency exchange. I personally use WazirX to just study about cryptocurrency and a few investments there. WazirX has its own cryptocurrency called VRX. So utility tokens are basically those tokens which are having their own exchanges or having their own blockchain. ETH has their own blockchain called Ethereum, and ETH coins tokens are being used. Similarly, VRX tokens. And then you have asset token, NFT, which is very famous now, non-fungible tokens. In fact, I had the privilege of attending a NFT conference in Cochin. And when I went to their homepage, they were accepting payments in cryptocurrency. Of course, I got to attend it free of cost. And that was a seminar on NFT, international conference, which was held in Cochin. NFT is nothing but digitalizing a physical painting and selling it online through exchange of cryptocurrency. So it's good, a lot of artists are now making money. They're showing their artwork, which is a good thing. And these are categorized under asset tokens. Well, if you want to know more about the various types, because there's so many types of tokens now that as I speak, maybe one more is being created. If you want to know about the various types, what is the trading volume? What is the market capitalization? Market capitalization means the number of shares into the value of the company, value of that particular crypto in the stock, in the market. That is the total market capitalization of a particular currency. So if you want to know about the types, the trading volumes, why it came through, and market capitalization, you can visit a website called coinmarket.com. Yes, coinmarket.com. It will give you loads of information. It's not pegged to any or part of any exchange. It is something like a Wikipedia of cryptocurrency. Having covered this, we will now try and understand the most interesting topic, that is as an investment. Crypto as an investment. Invest and earn. How can I invest? The best cryptocurrencies to invest in. And how to earn from such investments. So we will discuss how you can start off by investing. I'll take the example of WazirX because that's something I've practically done. What are the where to invest? What are the best cryptocurrencies to invest in, and how do you sort of earn income, whether it is on a periodic basis or a yearly basis? How do you earn income from such investments? Before you understand uh, all these investment related information, it's important to know what are the factors involved. When you go and invest in stocks, you would probably analyze the annual statements of the company, the balance sheet and the profit and loss statement. You may go through the annual report of the company to try and find out how the company has fared in the last 10 years. And then you would place your money in that particular stock. You may even go to the extent of doing some ratio analysis and then putting in your money. But in the crypto world, there are only two things you need to understand. One, is there a hype about this particular cryptocurrency? I was telling you about Elon Musk. The moment he put three words which were quite difficult to understand on Twitter, there was a word, he mentioned about Dogecoin, but the actual intent, no one understood. It became such a hype. He created a hype in the market, and Dogecoin almost overtook Bitcoin. So create a hype creation in the market is the first factor. And second one, of course, is the market capitalization. Market capitalization is the total value of that cryptocurrency in the market today. When we talk about shares, it is the number of shares into the market value of a particular company, the total market cap of that company, of that stock. So only two factors to keep in mind. If you analyze and you know this, you can list out the top 10 cryptocurrencies and then you can start your investment journey. So like I said, first let us touch on how to invest, right? Because you now understood the tech behind cryptocurrency. What is Bitcoin, a type of cryptocurrency? But how do you start mingling with Bitcoin and Ethereum and all that, all those types of cryptocurrency? Very simple. There are a lot of platforms being promoted by a lot of people. But WazirX is a common one, and it's like Zerodha for stock market. As a stock market broker, WazirX is the broker for cryptocurrency. So what you do is that, as step one, you go to the website. Better if you open the app on your phone and you sign up, right? You are also required to give your PAN card and Aadhaar card and all that. Don't worry. WazirX is a tested platform. They're just trying to do some KYC with you. As step two, you set up your bank account like how you did Paytm wallet on Google Pay and all that. Now that WhatsApp also has the mode of transacting. You complete your bank verification, add the bank account, and this would take 4 hours. Google Pay takes what, 4 minutes. But this process of signing up and entering KYC is easy. But setting up of the bank account takes and verifying of the same takes 4 hours. So you have to wait for 4 hours, 4 to 5 hours, and then your bank will be validated. So you can imagine the amount of checks in place, because they don't want any random person to come and play with cryptocurrency in their platform. This is a security check that WazirX has implemented, and they're telling all the sign-up people that, all the people who have logged in saying that you have to wait for 4 hours before we check. So they'll have some manual labor involved in checking their bank account, and it's correct, if it's a genuine bank account, if it's an Indian bank account, and if it is not being used to transact drugs or guns or whatever. As a third step, you go to the section deposit and you enter the amount that you want to add to the wallet from your bank account, of course. And then a crypto wallet is being made. and go to your vault and try to find out if the money is loaded in that particular vault. This is just like how you do Paytm vault. Then you go to the dashboard, WazirX exchange, and you try and understand which Bitcoin you want to invest in. I'll tell you about the best cryptocurrencies to invest in. But you check the exchange to find out what are the various currencies there. So you can find out like how you check on Google the rate of one USD. You check what is the BTC to INR rate. BTC means Bitcoin. What is the ETH to INR, Ethereum to INR rate? What is the USDT to INR rate, and so on. Once you go to the exchange, select your cryptocurrency that you want to buy. Let's say you select the Bitcoin, which is the most valuable cryptocurrency. You go to the section called the buy order proposal section or buy order section. And you enter there on the side how much of Bitcoin you want to buy. One Bitcoin, like I told you right now, it is 19 lakhs, close to around 19.5. I mean, it's quite difficult to buy one Bitcoin. So you buy 0.0001, you can buy in fractions, unlike stocks. You can buy in fractions. And let's say you want to buy 100 rupees worth of Bitcoin. So you can imagine how many decimals will come into the picture. So whatever you invest, you buy the Bitcoin at the lowest price available and check if your money has been reduced from the wallet. If you're using the WazirX app, it's quite user-friendly. You just swipe to the right and it's bought. The desktop version is pretty complicated, time consuming. So then you check your wallet and see if the money is being debited, reduced. And then what you do is that, so now that you bought a crypto, let's say you want to sell it. You go to the sell order option, you enter the crypto you want to sell. Let's say you want to sell the Bitcoin. And then you can enter the amount that you want to, or the amount of Bitcoin you want to sell for. And you will try and get the highest price. You will buy at the lowest price and you will sell at the highest price. So there are options, just like how you go to cardeco.com and you select the color and the car make and the type of cars. You can select how much you want to invest and what is the lowest buy rate available for that particular crypto, what is the highest sell rate available for that crypto, and so on. So you swipe to the right again, it is sold. And you see your wallet and it'll get added up. Now what happens is, if you want to, of course, give it to your CA to file your return, WazirX also has an option for you to download a monthly, quarterly, yearly transaction list, transaction report that will have all the transactions. And then you can give it to your person who's analyzing your transactions and filing your return. So that option is also available. So these are the simple steps on how you can start, playing with, or just to understand how this works. You can go to the exchange and try and find out what are the different. There's so much of data, but you stick to, let's say, Bitcoin or Ethereum or USDT, and you find out you buy for $100 and you sell it for, like, let's say, even if you sell it for 120 or 80, just a bigger amount, right? So that is okay to practice with. Coming to the best coins to invest in. So you need to, when you go to the WazirX exchange, you need to understand which are the best coins. So like I told you before, of course, Bitcoin is the most valuable, the most expensive. Then comes maybe Ethereum on the list, ETH, and then you have an Indian cryptocurrency, and that is Polygon Matic, the one you see in gold color. And then you have Ripple XRP, which is again a cryptocurrency. So Bitcoin, ETH, Tether or USDT, Polygon Matic, Ripple, these are the different Bitcoins which are at the top 10-15 list in India. Just to get an idea, like I was telling you before, this is, as you can see here, 15th August 1 Bitcoin. This is the value of 1 Bitcoin. Okay, 1 Bitcoin. 19,18,909. And you can see the graph. There's a heavy dip here, slowly increasing, but still at a decreasing rate. Something which was at 50 lakhs initially, a couple of years back, is now at 19 lakhs. So because it is not like, it does not have an underlying asset. It is a free tradable currency. It's highly volatile. It can go up to a great extent. It can come down to a great extent. Talking about ETH, much cheaper. At 15th August, it is 1,52,417. This is something that you can invest in and see how it works. Okay, there's no guarantee it will go up or go down. Again, ETH, yes, they have their own blockchain, but again, it's a highly volatile currency. But if you look at Tether or USDT, I told you Tether or USDT is linked or pegged to a US dollar. So the US dollar today is 80. I think the value of 1 USDT is 80. If tomorrow it is 82, the value of the Tether or USDT is 82. It's pegged to a US dollar being a commodity or an asset, like a commodity or an asset. That's why it's a stable coin. And people nowadays go more, if you want to do intraday, intraday trading or trading on a daily basis, not as investments, but as a profit-making business, then you should look at doing the same with USDT. So we have covered how to invest and where to invest the best cryptocurrencies. The third one is the most interesting of the lot, and that is how can I earn? So I'll tell you 5 sources. First, profit on sale of crypto assets on exchange. Of course, like stocks, you are a holder, you're holding it for a long period of time. And you are monitoring the price. The moment it is less, you will buy, because it's always advisable to buy at a lower rate. And then you'll hold. You don't have to check the graphs on a daily basis, get good sleep. And then later, when the price is high, there's a hype in the market, you will sell and make a profit. So this is a long-term kind of investment. So that's one way where you can earn a gain when you sell crypto assets on various exchanges. Second is passive interest, income from lending of cryptocurrencies. This source of income, not many people know about it. Not many exchanges provide an avenue for it, a source of earning for it. Only some exchanges, I've been told, has this feature. In this particular method, you can lend your cryptocurrency to your friend, to your father, to your sister, and then earn an interest, something like an FD interest. It goes to the same rate. Every week, it's a per annum interest, of course, so you can earn depending upon the period for which it is held, every week, every month, every quarter, every year. So what you're doing, you are a holder of cryptocurrencies, you are lending it to people who are interested in, let's say, trading or interested in investments. And for that, since you're holding it for some time, you are getting an interest. In fact, USDT, if you type on Google, interest income from lending of cryptocurrencies, it can go up to 14%. That's a good rate of return. Of course, interest income is not earned in money. It is earned in, everything is earned in cryptocurrency. Then you have to realize it in INR in your bank account, into your bank account. So interest income from lending of cryptocurrencies could be a source. And like I told you earlier, well, I don't recommend this, but if you're a day trader and you want to make instant profit, That is, every day you want to book profits or book losses and net profit and all that on a daily, weekly, monthly basis. You can do it on exchanges, of course. And the best coin for doing this as a practice initially for all those who are attending this session is to use, like I said, USD Tether. Because if you invest, say, rupees 100 today, it is pegged to the dollar, so into 81 will be the rate. Tomorrow, let's say it is 81 point something, let's say 82 or 80. From 80, it is now 82. So you would have earned that 100 rupees. But what if people are investing heavy amounts of money on a daily basis, 1 lakh into 80, one day they're buying it and they're selling it when it is 82, 1 lakh into 82. They are booking a profit of 2 lakhs. Now the price band of 80 to 82 can be in a month's time, can be in a 6 months time, can be in a 9 months time. So what you invested is 1 lakh, you are getting, whether it's weekly, monthly, quarter, depending upon the dollar rate. Right now, dollar rate has come a bit down. You can book your profits accordingly. And for those who are interested in gambling or playing with cryptocurrencies by investing heavy amounts, then USDT is a recommendation. For others, you can just invest small amounts and see how USDT prices are changing. Because you can always expect a upward trend. Right now, like I said, dollar rate has gone down, but into the future, because of various issues and factors, you can probably witness it to grow to 81, 82, 83 and all, like how the petrol prices are being. So daily you can get a 1% return. You can get at least a plus return on a daily basis. If you, let's say, you invest in USDT and tomorrow you sell it, you may end up getting some gain. Or you invest today and you sell it after 1 month, you may end up getting some gain. So short-term gains are possible with some types of currencies. Even with Bitcoins, it is possible, but the risk is terrible. Like I told you, if it's going down, it goes down to a great extent. So that is one thing that you need to be careful of. Finally, mining. Like I told you, when you mine and decrypt the data, approve it and place it on the blockchain, the reserve awards you 6 Bitcoins. And you can imagine the value. One is around 20 lakhs. And that is why these guys are quite crazy. They buy heavy machinery and computers and start mining every 10 minutes. If they get one, which is very difficult to crack these days, they get 6 Bitcoins. So you can imagine the value of investment that they have. So one, you can book the profit on sale of crypto assets, which you're holding on a long-term basis, like how you are holding stocks. And I would say that you tried this, the first method. You would be having some amount of stock investment as a long-term investor. Same thing you try with Bitcoin, not as much as what you're investing in stocks, but slightly less. See, don't be mindful of what is happening on daily basis. You see probably after 1 month if you want to book the profit and see how much you're getting, or probably after 6. Okay, because it's a small amount, the pressure is less. The headache is less. Second is interest income. Like I told you, some exchanges allow you to lend cryptocurrencies and thereby make you earn interest on a per annum basis, which can be double that what FT provides now. Like I told you, USDT can go up to 14%. So that is also a stream of income from cryptocurrencies. Daily, you have now cryptocurrency traders emerging. They are the ones who does trading on a daily basis. Okay, they will put 1 lakh, take out the 1 lakh when this price is good. You might end up getting profits, you might end up getting losses. But the safest one is Tether because it is a stable coin. It is linked or pegged to a US dollar. And then mining, for those who are interested in solving heavy, complex mathematical equations and have a lot of patience, then mining is also a lucrative opportunity to gain some income. So the famous ones are basically the first and the third one, right? Now comes a very controversial subject. We spent some time on it. That is the legality of cryptocurrency in India. Now, what happens is that more than what we're interested to learn about Bitcoin, cryptos, and the best cryptos to invest in, we are now worried, right? All of you attending the session, you want to know whether it is legal in India. That's depending on which you'll make your next move. Well, the fact is that upfront, I'm telling you, it is not illegal in India. So which means that the legality is still in question. The question mark still remains. But one thing certainly I can tell you, it is not till date, it is not illegal in India. So talking about the legality, RBI brought a lot of circulars. When this Satoshi Nakamoto came in with this white paper, there was a lot of buzz created in the Western world. And you know that when something happens there, we try to ape it. It comes very quickly, crosses the Arabian Sea and comes. And RBI witnessed this, the trend that was building. The exchanges were slowly building. And they brought out a multitude of various circulars trying to push, educate the banks, investors, public, not to basically ignore this term, not to consider this as an active investment option. So RBI, they gave a thumbs down, and their circular in 2018 said that we hereby prohibit all banks to act as or to help in dealing with crypto, with virtual currencies and providing services to all entities, which means WazirX will have a lot of bank tie-ups with it, only then can wallets be created. So they said that banks, you're not allowed to tie up with these exchanges. You're not allowed to deal in any form of virtual currency. So they were totally against crypto. And these exchanges could not access any sort of banking channels. And the businesses which were slowly building up 2018, 19, they crippled. The volumes fell by over 99%. It's an overnight downfall. But a lot of writ petitions, because in India we have the opportunity to file writ petitions to the High Court, to the higher courts. And therefore Supreme Court struck down the RBI's directive in the circular. And they said that RBI's ban on banks providing help to exchanges for cryptocurrency transactions is unconstitutional. It is ultra virus. It basically means that it is against the investment perception of the general public. So the Supreme Court said that yes, cryptocurrency is an unregulated item, but they never said that it is legal. They struck down a verdict because someone gave a lot of writ petitions stating that why can't I use a bank in my exchange for someone to invest cryptocurrency? So they said, yes, you're free to do that. Banks can adhere to it. It's good for the banks, right? It's a business for the banks as well. So they said that RBI cannot do this, but they never said it is illegal. They never said it is legal. They just said that banks can do this, and cryptocurrency, yes, it is an unregulated asset, unregulated form of currency. Then last year, towards the end of the year, government brought up a bill. They didn't bring up a bill. Probably what they did is they brought up a draft, and they informed the general public that there's a bill that will be discussed in the winter session of the Lok Sabha, the Parliament, Lok Sabha. And in this bill, we will be discussing so many things. Mind you, till date, this bill has not been passed. It is still lying in the draft form. Okay, because of some further discussions and deliberations on whether, because every day it's building, right? So if they cover something in 2021, new things could venture out in 2022. So the bill will become redundant. So they're just waiting for a pause. They're waiting for something, a good gap for them to bring out this particular bill. So what was mentioned in this bill? To the surprise of, actually, when Supreme Court gave that verdict, the price of Bitcoin by almost jumped to 700% between a year span. That is from April 20 to Feb 21, if I'm not wrong. It grew to 700% right after Supreme Court verdict came. When the RBI circular came, the volumes went down by 99%. When the Supreme Court verdict came, it went up by 700%. That's why you would have heard a lot about this 2 years back in 2020, 21. So rumors kept coming that the government will ultimately pass a law to completely ban it. But the exchanges were quite determined, hopeful that they cannot do it, because if they do it, then they're killing a newly venturing, evolving market in India. So the draft bill or the draft contents of the bill came. They said these are the items we'll be discussing, but it was never discussed in past. What were the items? As you can see on the right-hand side, the bill proposed that private cryptocurrencies are to be banned. Is Bitcoin a private cryptocurrency? No. Is ETH, USDT a private cryptocurrency? No. You have some examples of private cryptocurrency wherein no one can know who is transacting to who. There is no ledger. I can take the examples of Dash, Zcash, and all that which came in, and now it's not there. There were private cryptocurrencies. That is, there's nothing on the blockchain. There's nothing, two people can send cryptocurrency with each other. It's not transparent. It's not recorded anywhere. So government was, the first recommendation was that they will look to ban private cryptocurrency, which is okay. And then they said that RBI will bring its own official digital currency, which gave a low hope to all these crypto exchanges, because they said that RBI will bring its official digital currency, which means what? They are acknowledging that this is here to stay, and RBI will bring its own. They want to bring RBI into the picture, and saying that RBI will have its own official digital currency. Yes, they will bring in some rules for advertisements. Like I said, when you're watching IPL, even now, you can see a lot of CoinDX app advertisements, WazirX advertisements, and etc. etc. You can see a lot of these ads coming into picture. There was no rule set for these advertisements because their main motto was that invest and earn. I mean, there's no second thoughts on this. You invest in my platform, you earn. That was the ad all about. So it sort of gave a negative feeling to all the prospective investors out there. And therefore, they wanted to bring some kind of rigid rules for the advertisement. Crypto cannot be a legal tender, that they explicitly stated in the bill. Yes, we acknowledge it, because some countries like El Salvador and all that, yes, it's a legal tender, but in India, it can never be a legal tender, which is fine. We can treat it like an asset. And they said they will impose high taxes on crypto transactions. Now, the fact is that till date, out of 1, 2, 3, 4, 5 items discussed in the draft bill or the extract of the bill, only the last item they've brought into effect: high taxes on crypto transactions. Why it is high, I will tell you in the next slide. Neither have they brought an explicit ban on private cryptocurrency, which means some are still circulating. RBI's official digital currency is still in the making. Rules for advertisements for these exchanges and the currencies and all that is still not in place. And they are stating that it cannot be a legal tender, which will so be the case. So only the last one they were able to bring about changes, and that was brought about in the budget of 2022, which is applicable for the running year, financial year 22-23. Sometime in Feb, the budget came. And in the budget, they introduced a lot of items relating to crypto. That is why even now the currency rates are pretty on a depleting trend, on a decreasing trend. And because of this, a lot of money was stuck there. They saw their assets being depleted in terms of cryptocurrencies. So the government was steadfast in finally bringing taxes in the world of cryptocurrencies. Of course, there are many other countries that are imposing taxes, and the experts, the cryptocurrency exchanges and the experts, they were okay with this. They said that yes, this is good. You should definitely tax cryptocurrencies. It's good for the country. It's good for the government. They were happy about it. So the government, with the budget of 2022, they have brought some changes in the taxation system, especially for cryptocurrencies. So let's jump into what all are the different taxes that the government has brought in. They defined what is virtual digital assets in the Income Tax Act, which means they inserted a definition, VDA, and they included everything that they could find in the Wikipedia of cryptocurrency and include in the definition, so that nothing is left out. Everything. If you transact in VDA, this is the rate of tax. Flat rate of 30% on all crypto income. Now, what is this? If you earn profits, income from the transfer of cryptocurrency, like I told you initially, you buy, later sell, you book a gain, book a profit, flat 30%. You forget about 20%, 15% on stocks, which is usually levied. Flat 30%, which is a high rate, is levied on crypto income from the sale of cryptocurrencies. Be it any type, they say 30% on income from sale of VDA, virtual digital asset, which in other words, all kinds of cryptocurrencies, including NFT. So if you sell NFT and you're making an income, 30% will be taxed, irrespective of the holding period, whether it is long term, because in stock, right, you have a separate rate for, which is a lower rate for long term and a higher rate for short term, or it is 20 and 15%. Similarly, in the cryptocurrency world, there is no similarity when compared to stocks, irrespective of the fact that whether it is long term or short term, whether it is your business income or your capital gain income, 30% from the transfer of cryptocurrencies will be taxed. So no deductions are allowed. What they again said as an explanation to this particular taxation section is that once you earn cryptocurrency, 30% will be the tax that you have to pay from this income, right? From the income that you earn on crypto or on the virtual digital asset sale, you cannot reduce further losses. You may have a business loss from your business, but you may have a crypto income. You cannot set off the business loss against the income. No, it's an income, it will remain an income, and you have to pay 30% tax. So no further deduction could take place here. Third, a TDS provision was inserted. What is TDS? Tax deducted at source. When the buyer is making a payment to the seller, the buyer is obliged to deduct a certain amount of tax and pay to the income tax department. That's happening on almost all transactions these days in terms of services, even on goods now. In the crypto world, in the case of VDA, what they're saying is that if you are paying, right, if the aggregate amount of consideration is 10,000 rupees, and in some cases 50,000 rupees with exceptions, if you're paying that amount to the seller, then you have to deduct 1% TDS on the value and pay that to the income tax department. The seller will get a credit, no doubt, like how your normal TDS provision works. So a new section was inserted stating that if I am a buyer and I'm paying some consideration to a resident seller for purchase of VDA or crypto, then I need to deduct 1% of that value of payment made and pay to the department. Suppose you book a loss, say that your selling price was too less and you book a loss for your cryptocurrency. that loss you cannot set off against. Let's say you have a business income in this case and a loss from crypto, you cannot set off with the business income. It cannot be set off, and this loss cannot be carried forward. Your business income, your business loss, if you have loss from your business, you can set it off and you can carry forward against other incomes. But in the case of crypto, no, a loss is a loss. You cannot set it off against some other income so that you can avoid paying a higher rate of tax on the other income. Income is income, loss is loss. And finally, if you are kind enough to gift crypto to your friends, then if the value of that crypto exchange is exceeding 50,000 in terms of the fair value, the market value, then that will be taxed in the hands of your recipient. So in the case of gifting, if you are gifting crypto worth 50,000, exceeding 50,000 rupees, then the entire value of the gift being crypto will be taxed in the hands of the recipient, and he'll be subject to normal rates, not 30% this time, because 30% is for the transfer, sale of crypto for a consideration. In this case, there's no consideration, it's just a gift. So the person receiving gifts, the entire value, if it exceeds 50K, that will be subject to tax, like how it is now, how tax is being levied on income from other sources. So that those were the items which was brought about by the government in the budget 2022, and therefore, because these taxes were brought in, it's an indication that the government is here. They are not saying that crypto is legal. They're also not saying that crypto is illegal. But what we can take from this is that RBI is bringing its own digital currency. They have started imposing taxes on crypto transactions. So it's not, there's no question of taxes, right? Because you have to show the crypto income in your return of income, in your income tax return. So it is not an illegal income like drug money or gun money or whatever. So it's not illegal, but they're saying that it is not legal also. So we have to wait and watch to find out when that question mark sort of is solved by the government. Probably when this bill is further dealt with, we can understand whether they take a stand as to whether it is legal or not. They can also take a stand that it is illegal and they can start imposing taxes, no problem. But we get an indication that they are not going to make it illegal. I'll tell you why. If they make it illegal, what all they stand to do? What about the future of cryptocurrency in India? That's my last slide. India is the fastest growing market. Fastest growing market, like how we are the fastest developing nation, we are the fastest growing market. There was a point in time where the growth in crypto was more than the growth in stock market. Yes, we can expect some crypto specific laws to come our way. Now that they've imposed taxes, they could impose some laws for exchanges as well, no doubt, because the exchanges are free to trade now, are free to open up to the customers now. They could have some regulations for e-commerce, or like how they have taxes for e-commerce operators now. They could have some taxes on the on the people providing exchanges for cryptocurrency investments and transactions. You should look at the larger picture. That's why I'm telling you that they will never make it illegal. Because if they make it illegal, then one, their idea of a trillion economy is out of the question. If they make it illegal, then they are destroying the underlying technology, which is aligned with the objectives of Web 3.0. Web 3.0 is the case, is the third version of the internet, wherein everything will be decentralized, right? You will not have Facebook, you will not have Amazon as the big players, everything will be decentralized, even we can transact easily. So that's why they're building, it's kind of aligning with the version of Metaverse, right? Web 3.0 is aligned with those objectives there. If they make it illegal, there'll be a lot of brain drain happening, wherein a lot of technically, a lot of technical experts, technically proficient people would be exiting the country and participating in the crypto market there. And finally, a lot of employment opportunities would be lost if they make it illegal, because nowadays almost all the exchanges that we hear of have become unicorns. WazirX, CoinDX, etc., have become unicorns. They are employing a lot of people because they have crores worth of customers with them. Women's participation, another interesting thing I came around. Women's participation grown by 1,000% in crypto, especially in the NFT space. I was reading an article wherein artists could find a source of income by making digital art, by digitalizing art, and she could, make ends meet because of this technology. So with all these ideas, with all the positive things about crypto, you should decide whether you should invest or not. Yes, it is like gambling. Absolutely. There's no doubt in this, because it is not pegged to any exchange, commodity, reserve, cash, gold, nothing. It can go up, it can go down. It is unregulated as I speak. But you can try out, because the tech is here to stay. Cryptocurrency is the next form of currency, and it's not going anywhere. It will be there for some time, because it is aligning with the new form of Web 3.0, the new form of technology. That's all from my side. I hope I was able to make things clear, especially try and make you understand what exactly cryptocurrency is and how this works, and whether you should invest, become a long-term or a short-term investor. Thank you.
Thank you, Deepak, for a very informative session. Indeed, very enlightening. Regarding the information regarding cryptos. These are all Greek and Latin for people, because they all think that they have to be very tech savvy person in order to understand. So I really appreciate putting it in very simple terms. Right. Thank you so much. And I think we can go forward to the question and session, the Q&A session. I think they have been waiting patiently. They'll be having doubts. So attendees, request you to put the Q&A question in the chat box.
I think there are no doubts coming.
Yeah.
So Deepakji, yes, I think most of our attendees, they have understood everything, so there are no questions coming up.
It's either they understand everything or they not understand anything.
So let's settle with the understood.
I think that's the first part is right, Deepak, because
Yes.
it was very well explained, I would say.
Thank you.
Yeah, Jose, you are about to say something.
Yes, Deepakji, thank you so much for joining us and enlightening the whole participant. And personally, ഞാൻ കുറച്ചായിട്ട് ട്രെയിനിങ് നിർത്തി വെച്ചിരിക്കുകയായിരുന്നു നമ്മുടെ ഒരു ക്രാഷ് ഒക്കെ വന്നതിന് ശേഷം. പക്ഷേ I think I'll restart നാളെ മുതൽ I'll restart, I guess. Okay, so thank you so much. Akhilji, thank you so much for moderating and supporting us.
My pleasure, Jose. My pleasure. Thank you.
So thank you all for joining. See you for the next session.
Thank you, Jose.
Thank you so much, all of you, for inviting me. A great time. Thank you.
Thank you.
Have a great night. Bye.